Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Giambrone, Managing Director and Portfolio Manager with Barrow, Hanley. Mark, it's great to meet with you. Welcome to Trade Talks.
Thank you, Jill. Thanks for having me today.
And Mark, let's talk about earnings. With stocks at all-time highs here, just how important is this earnings season going to be?
We think it's extremely important, and we also think they're going to be very, very good, very strong. As we've moved into this year, we've seen significant rises in consensus earnings across the board. And it's our expectations that things are going to be very strong, even above expectations as we move forward into the second quarter, similar to what we saw in the first quarter.
So would you say now's the time to be more selective? It's more of an active management type of environment?
I think that's absolutely correct. So we have seen the market have high correlation on the downside. A year ago, we saw the market have a high correlation on the upside here in terms of a reopening trade in general. Now it's more important to be selective, to focus on companies with exactly what you just said, Jill, which is growing strong earnings that continue to drive stock performance as we move forward, as opposed to just a general lift in the market because the world is trying to reopen and get back to business.
Let's talk about inflation, interest rates, and higher taxes. They're all on the horizon. That could potentially be some headwinds here. Do you think that value could potentially make a comeback if that, in fact, is the backdrop?
I do. I think that we have gotten a lot of the sugar and not a lot of the salt to the point in this recovery. So we've gotten monetary stimulus, we've gotten fiscal stimulus. And even with this latest infrastructure bill, we continue to get governmental support for the economy, and rates continue to even drive lower as we speak over this week. However, as we think about this moving forward, with the inflationary pressures where they are, not all of them will be transitory. Rates will certainly rise, in our opinion, in the future. The Fed will start to taper. That's going to have an impact. And we're going to see the government now move toward pay-fors, which means higher tax rates on corporations, not individuals. Under those scenarios, value, which has most of its value today, not discounted on the future, and in most cases already pay higher tax rates or aren't being discounted, or significant earnings aren't being discounted back with low interest rates. We think that's a period where, again, selectively, value can work very well.
It's just when we think about this tax plan, if we start to tax businesses that are trying to emerge from the pandemic, even if we tax, the larger global conglomerates, that's going to impact how they hire, how much money they put into R&D, which of course, investing into R&D translates into future growth. So it seems like that's going to be a factor that they have to contend with as we think about longer term earnings.
I think there's no question that there's significant wage pressure everywhere. I think what we're finding today in the world is we're short everything, thanks to what happened through the COVID supply chains. And so what that means, we're also short labor. But labor has been boosted by, again, extra dollars being given through unemployment, et cetera, which was necessary. But what it's done is raise the bar now for corporations to rehire people. It's also, inflation is pushing pressure on the consumer to demand higher wages to come back to work. And so what we're going to see is that's clearly going to flow through again. And that's why you have to focus on companies that can continue to have strong earnings and cash flows moving forward, and also that have pricing power to be able to offset these changes in inflation versus just saying, oh, the economy is reopening, and therefore all these reopening stocks should go up. That's not how it's going to be as we move forward, in our opinion.
So Mark, with that backdrop, what sectors, what areas of the market are most compelling?
We love the industrial areas. We love the consumer discretionary areas. We think there's still significant pricing power for high quality companies with unique offerings and unique brands. And we think there's a significant shift in demand and consumer behavior now from your house was your everything. It was your gym, it was your vacation, it was your resort, it was your restaurant, it was your hotel. And now, guess what? We can actually go do some of those things. And so what we want to focus on is companies now, again, as long as they haven't gotten ahead of themselves from a valuation perspective, that are going to benefit from where the economy is now either reopening or where dollars are now being spent.
All right, Mark, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.